Imagine waking up to a world where your only source of income suddenly disappears. Most of us were taught to go to school, get a good job, and work for decades. But here's the harsh reality: relying on just one paycheck is risky. One layoff, one economic downturn, and your financial stability could vanish overnight. Wealthy people know this, and that's why they don't depend on a single stream. Instead, they build multiple sources of income, creating a safety net and a path to true freedom. Today, we'll break down the 7 streams of income that set the wealthy apart, and by the end, you'll have a clear roadmap to start building your own financial fortress. Why do the wealthy focus on multiple income streams? It's simple: security and growth. When you have money coming in from different places, you're not at the mercy of a single employer or industry. If one stream dries up, the others keep you afloat. This approach isn't just about making more money, it's about protecting what you have and opening doors to new opportunities. Throughout this video, we'll explore each stream in detail, showing you how to start small and build over time. Let's dive into the first and most familiar stream: earned income. Earned income is where most people start. This is your regular job, your freelance gigs, or any work where you trade your time for money. It's the fastest way to get cash in the door, especially when you're just beginning your financial journey. But there's a catch: it's also the most heavily taxed and limited by the hours in your day. No matter how hard you work, there's only so much you can earn because you only have 24 hours. That's why the wealthy use earned income as a starting point, not the end goal. They treat it as seed money to invest in other streams. While earned income is essential, it comes with a trap: trading time for money. If you stop working, the money stops too. This is why it's crucial not to see your job as the final destination. Instead, use your paycheck as a tool to fund your journey toward financial independence. The wealthy understand this and are always looking for ways to turn their active income into passive streams. Let's move on to the next stream: rental income, which can start working for you even while you sleep. Rental income is often called the cash flow king. This stream comes from renting out assets, most commonly real estate. The classic example is buying a property and having tenants pay rent, which covers your mortgage and leaves you with profit each month. But you don't need to own an entire house to get started. Today, you can rent out a spare room on Airbnb or even your car through platforms like Turo. The goal is to create a steady, passive cash flow that can eventually cover your living expenses, giving you more freedom and less stress. Rental game has changed. You no longer need to buy an entire property to earn rental income. Thanks to technology, you can rent out a spare bedroom, a parking space, or even your vehicle. Platforms like Airbnb and Turo make it easy to start small and scale up as you learn. This flexibility means almost anyone can tap into rental income regardless of their starting point. The key is to look for assets you already own or can acquire affordably and put them to work for you. Dividend income is a favorite among investors. This stream comes from owning shares in companies that pay you a portion of their profits simply for holding their stock. Imagine owning a piece of a giant like Coca-Cola or Apple and receiving a check every quarter. You don't have to be a day trader or financial expert to benefit. Many wealthy individuals focus on dividend aristocrats, companies with a long history of increasing payouts. This is the ultimate lazy income. Set it up once and let your money work for you. Dividends are paid out of a company's profits to shareholders. The more shares you own, the bigger your payout. Unlike trading stocks for quick gains, dividend investing is about patience and consistency. Over time, these payments can grow, especially if you reinvest them to buy more shares. This compounding effect is powerful, and it's a strategy used by many wealthy investors to build long-term wealth without constant effort or risk. Interest income is all about becoming the lender instead of the borrower. When you put your money in high-yield savings accounts, certificates of deposit, or peer-to-peer lending platforms, you earn interest on your cash. This stream is low risk and perfect for your emergency fund. However, in times of high inflation, you need to make sure your interest rate keeps up or you could lose purchasing power. Still, it's a smart way to make your idle cash work for you, providing a safety net and a bit of extra income. It's important to remember that not all interest income is created equal. If inflation is higher than your interest rate, your money loses value over time. That's why savvy savers look for the best rates and use interest income mainly for short-term goals or emergency funds. This way, your cash isn't just sitting idle, it's earning a little extra while staying accessible for when you need it most. Profits income is the heart of entrepreneurship. This stream comes from buying and selling goods or services for a profit. Think of flipping items on eBay, running a dropshipping store, or creating a product and selling it for more than it cost you. Unlike earned income, profits aren't tied directly to your hours. The more value you provide and the more you can sell, the more you can earn. This is where creativity and hustle can really pay off, and it's a favorite for those who want to build something of their own. Beauty of profits income is scalability. If you can create a system that sells products or services without your constant involvement, your income can grow exponentially. This is why many entrepreneurs focus on building businesses that can run with minimal oversight. Whether it's an online store, a consulting service, or a digital product, the key is to find ways to scale your efforts and multiply your results. Capital gains are the profits you make when you sell an asset for more than you paid for it. This could be stocks, real estate, or even collectibles like art or cryptocurrency. The key difference from dividends is that you only realize capital gains when you sell the asset. For example, buying Bitcoin at $20,000 and selling at $60,000, or flipping a fixer-upper house for a big profit. This stream can lead to significant windfalls, especially if you hold assets for the long term. Think of dividends as the milk you get from owning a cow, while capital gains are the profit from selling the cow itself. Both streams are valuable, but they work differently. Dividends provide regular income, while capital gains offer lump sums when you sell. The wealthy often use both strategies, balancing steady cash flow with opportunities for big paydays. One advantage of capital gains is the tax treatment. If you hold an asset for over a year, you typically qualify for long-term capital gains tax rates, which are often lower than regular income tax. This can make a huge difference in how much you keep after a big sale. Smart investors plan their sales to maximize these tax benefits, turning capital gains into a powerful wealth-building tool. Royalty income is all about getting paid for your ideas and creations. This stream comes from intellectual property, things like books, music, patents, or digital courses. Every time someone uses your work, you earn a royalty. In today's world, you can even earn royalties from YouTube videos or online content. The beauty of this stream is that you create something once and it can pay you for years to come. It's the ultimate legacy income. Digital age has made royalty income more accessible than ever. You don't have to be a famous author or musician. Anyone can create digital products, courses, or videos and earn royalties as people use or watch them. Platforms like YouTube, Amazon Kindle, and online course sites have opened the door for creators of all kinds. If you have knowledge or creativity to share, royalty income could be your ticket to passive wealth. Sets the wealthy apart isn't just how much they earn, but how they think about money. They see every dollar as a tool to create more income, not just something to spend. By focusing on building multiple streams, they protect themselves from risk and open up new opportunities for growth. This mindset is something anyone can adopt, no matter where you're starting from. You don't need all 7 streams right away. Most millionaires start with just one, usually earned income, and gradually funnel their money into other streams as they grow. The key is to pick one new stream that fits your skills and resources and commit to starting it this month. Whether it's opening a brokerage account, listing an item for sale, or creating a digital product, small steps add up over time. Ready to take action? Start by reviewing the 7 streams and identifying which one you don't have yet. Research what it takes to get started, set a simple goal, and take the first step. Remember, the journey to financial freedom is a marathon, not a sprint. Consistency and learning along the way are your best allies. Let's take a closer look at earned income. This stream is the foundation for most people. Whether you're working a traditional job, freelancing, or running a side hustle, earned income is often the first step toward financial independence. The key is to maximize your skills and negotiate for higher pay, while also looking for ways to reduce your reliance on this stream over time. Rental income can be a game changer. Start by researching local markets and understanding what types of properties or assets are in demand. Even if you can't buy a property yet, consider renting out what you already have. The key is to start small, learn the ropes, and reinvest your profits to grow your rental portfolio over time. To get started with dividend income, open a brokerage account and research companies with a strong history of paying and increasing dividends. Focus on stability and long-term growth rather than chasing high yields. Reinvest your dividends to maximize compounding and watch your passive income grow year after year. Interest income is a safe and steady stream, perfect for conservative investors or those just starting out. Compare rates from different banks and platforms and use this stream to keep your emergency fund growing. Remember, the goal is to earn more than inflation and keep your money working for you, even when you're not. If you're interested in profits income, start by identifying products or services you can buy low and sell high. Use online marketplaces to test ideas with minimal risk. As you gain experience, look for ways to automate or outsource parts of your business, freeing up your time and increasing your earning potential. For capital gains, focus on assets with strong growth potential. This could be stocks, real estate, or even collectibles. Do your research, be patient, and avoid emotional decisions. The goal is to buy quality assets and hold them until the time is right to sell for a profit, taking advantage of favorable tax rates when possible. To earn royalty income, think about what you can create once and sell over and over. This could be writing a book, composing music, or developing an online course. Use digital platforms to reach a global audience and automate your sales, turning your creativity into a long-term income stream. Think of each income stream as a brick in your financial fortress. The more streams you build, the stronger your foundation becomes. If one stream falters, the others keep you secure. This approach isn't just for the ultra-wealthy. Anyone can start one step at a time. The key is consistency and a willingness to learn. Every journey comes with challenges. You might face setbacks, make mistakes, or feel overwhelmed. The important thing is to keep moving forward, learn from your experiences, adjust your strategy, and remember that building wealth is a long-term game. The most successful people are those who stay persistent and adaptable. Don't underestimate the power of small victories. Every new stream you start, every dollar you earn passively is a step closer to financial freedom. Celebrate your progress and use it as motivation to keep going. Over time, these small wins add up to big results. The world of income streams is always evolving. New opportunities emerge and old ones change. Stay curious, keep learning, and be willing to adapt your strategy as needed. The more you know, the better equipped you'll be to spot and seize new chances for growth. One of the most powerful forces in wealth building is compounding. Whether it's reinvesting dividends, earning interest, or growing your business profits, compounding allows your money to grow faster over time. The earlier you start, the more dramatic the results. Make compounding your ally on the journey to financial independence. It's easy to get caught up in the excitement and make mistakes, like chasing high returns, ignoring risk, or spreading yourself too thin. The key is to stay focused, do your research, and build your streams one at a time. learn from others' experiences, and avoid shortcuts that could set you back. Every income stream comes with its own risks and rewards. Some, like earned and interest income, are stable but limited. Others, like profits and capital gains, offer bigger rewards but also more risk. The secret is to balance your streams so you have both security and growth potential. Diversification is your best friend. Keep track of your income streams and monitor your progress regularly. Use simple tools or apps to see where your money is coming from and how each stream is performing. This helps you stay motivated and spot areas for improvement. Remember, what gets measured gets managed. As your streams start generating income, reinvest a portion of your profits to grow even faster. This could mean buying more stocks, expanding your rental portfolio, or launching a new business. Reinvesting accelerates your progress and helps you reach your financial goals sooner. Multiple income streams don't just benefit you, they can also provide security for your family and future generations. By building a diversified financial foundation, you create a legacy that can last beyond your lifetime. This is the true power of wealth: freedom, security, and the ability to make a difference. Motivation can waver, especially when progress feels slow. Surround yourself with supportive people, set clear goals, and remind yourself why you started. Celebrate your achievements and keep your eyes on the bigger picture. Every step forward is a victory. Look for inspiration from those who have already built multiple income streams. Read books, watch interviews, and learn from their successes and failures. Their stories can provide valuable lessons and keep you motivated on your own journey. Let's quickly recap the 7 streams of income: earned income, rental income, dividend income, interest income, profits income, capital gains, and royalty income. Each one offers unique benefits and challenges, but together they form a powerful strategy for building lasting wealth. Which one will you start with? Now that you know the 7 streams, it's time to take action. Choose one that fits your interests and resources and make a plan to get started. Remember, building wealth is a journey and every step counts. Stay focused, keep learning, and don't be afraid to ask for help along the way. There are countless resources available to help you on your journey. From books and podcasts to online courses and communities, take advantage of the tools at your disposal. The more you learn, the more confident and capable you'll become in building your streams of income. Accountability is key to making progress. Share your goals with a friend, join a community, or track your milestones publicly. When you have support and encouragement, you're more likely to stay on track and achieve your financial dreams. Every step you take toward building multiple income streams is worth celebrating. Reflect on how far you've come and the progress you've made. Use your achievements as fuel to keep moving forward, and remember that financial freedom is within your reach. As you continue your journey, keep your eyes open for new opportunities and stay adaptable. The world is always changing, and so are the ways to build wealth. Stay curious, keep learning, and never stop striving for financial independence. Your future self will thank you for the steps you take today.